Hello students, welcome to AffairsCloud.
We have an app called Careers Cloud which you can go and download it from the Play Store. So after downloading it, you can easily log in using your Gmail ID. Once you have logged in, you will be redirected to a home page which contains 4 tabs beneath it. One is Home, the other is All Courses, next is My Courses, and the last one is a Doubt Session. So under All Courses, you can access various types of courses like Reasoning, Quant, English, and also exam specific courses can also be accessed under this All Courses. If you click this Crack Current Affairs, you will be redirected to this page. So under this, you can see various tabs that are available. So here, if you see, the current affairs will be available in English medium, this under Hindi medium, and here banking awareness, we will provide you the monthly compilation of the banking news and current affairs exam PDF, and also special current affairs, which includes mainly the budget, the union budget, the economic survey, which is very important from the exam perspective. And this is topic wise content where that topics news related to the specific topic, they will be combined together and provided to you. For example, see appointments. All the appointments in that particular month will be combined together in a specific place. And similarly, in case of banking, economic news, so all will be combined together. So this will be easy for you to relate to each other news. Next, you can access the daily current affairs on a daily basis, weekly basis, and also on a monthly basis. So after reading the weekly or the daily news, you can also attend our quiz in order to strengthen your knowledge. Under the monthly current affairs, if you see, there are 2 types of PDF that are available. One is the pocket PDF, the other one is the normal PDF. This pocket PDF will give you a brief content of our current affairs, and this will provide you a detailed analysis of the current affairs. So it is always preferable to read this detailed analysis and then have a go through of this pocket PDF. Next is that we also provide you the PIB news apart from the current affairs. So you can go and access our PIB news on a daily basis from this part. And as I mentioned, this special CA covers very special topics like budgets and economic survey. After reading the content provided in this PDF, you can go and attend the quiz given below. And next is the exam perspective PDF. So if you see IBPS PO mains, IBPS RRB clerk, SBI clerk, so these are all exam perspective PDF. So if you go and check, these PDF will contain around 5 to 6 months of the current affairs, which has high chances of high chances of being asked in this SBI clerk mains exam. So it is very useful to go and read this PDF from an exam perspective point. Today we will be covering July 5th week banking and finance awareness news. Moving to the first news. The first news is about the revision of the surveillance framework by the SEBI and the stock exchanges for the small cap firms. So here if you see the SEBI, it has revised the ESM. ESM is nothing but enhanced surveillance mechanism. For whom? For the companies with market capitalization under 1000 crores. The market capitalization is formula is nothing but outstanding shares. Okay, outstanding shares into the share price. So say suppose the outstanding shares, that is the shares held by the shareholders, there are 1000 in number. Okay, and share price, this is just for an example I'm telling, share price is 10, then the market capitalization will be 10,000. Okay, this is just for an example I'm telling. So here if you see, all the companies under the market capitalization of 1000 crores will be covered under this enhanced surveillance mechanism. Okay, so why is this required? This is to curb the price manipulation of the small and micro cap stocks. So what happens is the small and micro cap stocks, they have more exposure, or they are more vulnerable to these price manipulation. Okay, so it is very important to control the price manipulation because you have to protect the investors. One of the major objective of the SEBI is to protect the investors, and that is why this enhanced surveillance mechanism has been introduced. Okay, so we will cover these 2 stages under this enhanced surveillance mechanism. So how do the SEBI or the stock exchange, they place certain stock in a surveillance? Okay, how do they do that? That is, they monitor certain metrics or certain parameters, right? And if those parameters cross the threshold, if it crosses the threshold or the limit, then it is said to be placed in the surveillance. Okay, they will continuously be monitoring certain parameters in the stocks, and when it crosses that certain assigned limit, then it is placed under the surveillance. Similarly, here also it is the same way. So first stage 1. So here if you see, if the high-low price variation metric threshold is crossed, then the stock is placed under the stage 1. So here to place a stock under stage 1, the main metric that is evaluated or monitored is high-low price variation. So if you see in particular day itself, you take a share, okay, say share X, it will have a high price, it will have a low price. Okay, every day if you see, there will be a opening price, closing price, high price and low price. So this will be monitored, and then when there's a huge variation between high and low price, then that particular stock will be placed in the stage 1. So now if you see in this enhancement, apart from the high low price variation, there's one more metric that has been added. What is that metric? That metric is close to close price trend. So I told you, right, there's a pricing called close pricing. Okay, nothing but at the end of the day, what is the closing price? So here if you see the close to close price trend over the last 3 months. So what has been the closing price of the stock in the last 3 months? Has then been a huge variation between the closing price from the past 1 month or 2 months, that is monitored. Okay, so now if you see, two metrics are there: high low price variation, close to close price variation. Okay, these two are highly monitored, and then only it is placed under the stage 1. Okay, next moving to the stage 2. So if you see under stage 2, the new parameter is PE ratio. So here the PE ratio is nothing but price to earning ratio. This is monitored. So when the stocks with a PE ratio up to twice that of the Nifty 500 index, when the PE ratio of that particular stock reaches up to twice that of the Nifty 500 index, then it is placed under the stage 2. That is, it moves from stage 1 to stage 2. Remember, PE ratio that to twice that of the Nifty 500 index. Then it is placed in the stage 2. Now, what is this price to earning ratio? Okay, that is nothing but share price of that particular stock divided by EPS. What is EPS? EPS is earning per share. Okay, EPS is earning per share. How is EPS calculated? Net profit after tax, after minusing the preferred dividends, divided by the number of outstanding shares. This is the formula for calculating earning per share. Okay, it is mainly to find out that how much can one particular share earn. Okay, any person who is investing in share, they would obviously expect returns, right? So EPS tells how much that particular one share can earn from that company. Okay, and this PE ratio, what it tells, what is the earning that the share gets compared to the price of the share. Okay, say suppose one person X has bought a share of 1 lakh. Okay, that one particular share cost 1 lakh, but the earning per share is just 1 rupee. So that is a huge variation, right? So 1 lakh he is spending to buy the share, but in return, if you see, he is just getting 1 rupee for one share. This is the earning. So this is the comparison done. Okay, that is what is called PE ratio. So this PE ratio tells you the relationship between the share price and the earning per share. Okay, remember stage 1, the new parameter is close to close price trend, and stage 2, PE ratio. Now, once the companies have entered the stage 1, there will be certain restrictions made. What are those restrictions? First one is 100% margin requirement starting from T plus 2 days. See, sometimes what happens is that you don't have to pay the entire price of the share to buy the share. Okay, say suppose the share price is 1000 rupees. You don't have to pay the entire 1000 rupees to buy the share. That is called as the margin trading. Okay, that concept is called as margin trading, where with just 20 or 30% money, you can purchase that. I mean, you can execute the buy trade. Okay, so with just 200 or 300 rupees, you can execute the buy trade. That is what is called this margin trading. But if that particular stock is there, okay, if this micro or the small stock is in the stage 1 surveillance, then 100% margin requirement. That is, you have to pay 1000 rupees to buy the share. Margin trading is not accepted in this case. Okay, remember 100% margin is required to buy the share. Next is a trade for trade settlement mechanism with a 5% price band. Okay, so here what happens is that a trade for trade settlement means that you will get the shares in your demat account when you execute a buy trade, and what you will pay the money in return. This is what is called as trade for trade settlement. You might think that all the trades happen this way. No, not at all. There are cases where a trade gets executed, a buy gets executed even without shares being credited to your account. How is that possible? It is possible in intra-trade. There's something called intra-trade. Okay, intra-trade settlement, what happens is the buy, sell, both gets executed on the same day. Okay, So intraday, what happens is that here the shares do not get executed to the buyer's account. Okay, it's only the difference amount. I'm telling you, it is only the money that's credited or debited. Okay, say suppose the person has bought a share for 1000 rupees. Okay, so end of the day, the share becomes 102 rupees. So here, what is the profit? Here, 2 rupee is the profit, right? So end of the day, this 2 rupee only gets credited to the trader account. Okay, that is what is called the intra-trade. Here, the shares do not get traded. Okay, whatever buy is there, that will be net off. Okay, square off will be done at the end of the day itself. So one thing that I'll tell it to you in the simple words. Trade for trade settlement means that shares, when you execute a buy trade, shares gets credited in your demat account and money gets debited from your account and goes to the seller account. Okay. Generally, in the other way, if you see in the intra trade and all, nothing, no shares transfer takes place. Only money transfer takes place. That is what is called a trade for trade settlement mechanism. Okay. With a 5% band means 5% price band means that only a maximum of 5% fluctuation is accepted. What does 5% fluctuation means? Say suppose the share of that the price of that particular share is 100 rupees. Okay, so a maximum fluctuation it can do is somewhere between 95 to 105. This is the maximum fluctuation that is accepted. The price can vary between 95 to 105, not beyond that. That is what it's called 5% price band. Next is 2% price band. Suppose if that particular share is already placed in a 2% price band. 2% price band means what? This 100 rupee share can vary only between 102 to 98. That's what it means, right? So if that particular share is already placed in a 2% price band, then it will remain in 2%, not 5%. Okay, sometimes what happens is that already some issue would have been with that share, and the share, they would have put a restriction on the share that this share price can go only up to 2%. So if it is there in the 2%, the 2% will only continue and not this 5%. Okay. The next news is SEBI has extended deadline for the implementation of the nomination framework. So in January 2025, if you see, SEBI has released a revamped directions or a circular regarding this revamped nomination framework. So what is this nomination framework regarding? It is to improve or to simplify the nomination facilities for the mutual fund folios and the demat account. Okay. So why was this required? It was because in SEBI, in this mutual fund and demat account, what happened is that the unclaimed assets, it kept increasing, it kept piling up. Just like if you see, even in banks, if there is an unclaimed account, it gets transferred for like 10 years. After 10 years, it gets transferred to the DEFT. Okay, DEFT is maintained by the Reserve Bank of India. Right, and now if you see, the banks are also taking various measures along with RBI. The banks are also taking various measures to reduce the unclaimed accounts and also to get in contact with people who are associated with the unclaimed accounts. So similarly, the purpose of this is also the same. Okay, so to reduce the accumulation of the unclaimed assets, like it is someone else's asset, right? Since that person has passed away, his or her relatives are not aware of it. Why are they not aware of it? Because they were not added as a nominee. Previously, if you see, adding nominee was not a compulsory option. Okay, it was an option. It was an option that if they want, they can add or not. But now, if you see, they are bringing it as a compulsory option so that unclaimed assets can be reduced. They don't start piling up. That is the main purpose of this circular. Okay. So if you see, it was supposed to be implemented previously itself. Now the deadline for it has been extended. So the second and the third phases of its revamped nomination framework. Okay. The second and the third phases of this nomination framework has been extended. So if you see, the second phase, it was initially to be implemented by June 1st, 2025. Now it has been extended up to August 2025, and phase 3, if you see, it was expected to be implemented by September 1st, 2025. It has been extended to December 2025. These are the new deadline for different phase implementation. So if you see, certain implementation or certain changes that have been brought under this nomination framework is that a compulsory nomination for the single holder accounts. So what does this mean? It means that just like a bank account, there is something called joint account, right? So what does joint account mean? More than 1 or 2 person, okay, they can together open an account. Similarly, mutual fund folio or a demat account also, more than 1 or 2 person can jointly come and open an account. So what they have said here is compulsory nomination for a single holder account. So because if he or she passes away, the whatever available amount is there in the demat account or the shares, that will be transferred to the nominee. That is why it is saying that it's compulsory nomination for the single holder accounts. Next is nomination up to 10 individuals per account or folio is allowed. And next is after the demise of one or more joint account holders, assets will be transferred to the surviving holders. So which means that suppose there are 3 joint account holders in a demat account. Okay, so first, second and third. The first and second person passed away. So now if you see, the assets will be automatically transferred to the third person without the need of additional KYC. At the time of the transfer, they will not ask for the additional KYC. They will just transfer the shares to the third person. Okay, that is it. So these are the various changes that will be brought in the revamped nomination framework. Next is RBI caps investments by banks, NBFCs at 20% of the corpus of the AAF. AAF is nothing but alternate investment fund. Okay, so bank, they invest their money in the alternate investment fund. It is just an investment opportunity through which bank will earn some money. Okay, so this is permitted by the Reserve Bank of India. Now what is this capping? See, what RBI had observed that the banks, they were doing evergreening of loans. By this way of investments, they were doing evergreening of loans. What does evergreening of loan mean? Means that a bank has given a loan to a person. The person is unable to pay the amount back to the bank. So bank does not want that particular loan to become an NPA. Okay, so to stop it from becoming an NPA, what the bank does is that bank sanctions another loan and gives it to the same person who's already not being able to pay that loan, the previous loan. So this person gets a new loan, and using that new loan, he pays that old loan. Okay, so by this what happens? That loan doesn't become an NPA. So this is one of the things that banks do to reduce or to not create more NPAs. That is what is called as evergreening of loans. Creating new loans to pay the older loans so that that loan doesn't become an NPA. So how does this happen in an alternate investment fund? So banks, as I said, they invest in alternate investment fund. Say this alternate investment fund is X. Okay, this alternate investment fund invests in further the debtor company. Say the debtor company is H. Okay, what does this debtor company mean? Debtor company means that it has taken loan from this bank. Okay, it has taken loan from this bank in the past 12 months. If in the past 12 months, if this debtor company H has taken a loan from this bank, then it is called as a debtor company. Okay, this is the time range, 12 months. So this alternate investment fund, they invest in this debtor company, and now if you see, this debtor company uses that money to repay the loan. So this is also a form of evergreening, right? Only thing is that the bank does not directly give the money to the debtor company, but it gives it to the alternate investment fund, and the alternate investment fund invests in the debtor company, and the debtor company uses that money to repay the loan. This is also a form of evergreening, and this is not good for the entire financial health system. So to reduce it, to curb it, the RBI has capped investments by the banks and the NBFC. Okay. So to which all banks it is applicable. So it is applicable to the scheduled commercial banks, small finance bank, local area bank, regional rural bank, primary urban cooperative bank, state cooperative bank, central cooperative banks, all India financial institution, and NBFCs, including the housing finance company. So these are the entities to which this instruction is applicable to. Okay, remember it. Next, so what is the cap that the RBI has now released? So no single regulated entity can invest more than 10% of the AAF corpus. Okay, so a single entity cannot invest more than 10% of the AAF corpus. So say suppose the AAF corpus is 100 crores. Okay, so the maximum amount a single regulated entity can invest here is only up to 9.9 crores. Okay, that is lesser than 10 crores. This is the maximum amount that can invest. Okay, this is for the single regulated entity. Next, if you see, all regulated entity together, if you see, they can invest only up to maximum of 20%. So here, same example, if you see, all regulated entity together, they cannot invest more than 20 crores in the alternate investment fund if the alternate investment fund corpus is 100 crores. Okay, so in the previous case we saw single regulated entity, the limit is 10%, and in case of all regulated entities together, if you see, it is 20%. Remember this, very, very important. Next is Suppose a regulated entity invests more than 5%, okay, in the alternate investment fund, and this alternate investment fund in turn invests in the debtor company, okay, that has borrowed money from this regulated entity in the past 12 months. Then whatever amount that has been invested, that has to have a 100% provision. Okay, 100% provision should be kept aside. Say suppose the regulated entity has invested, say suppose 10 crores, and this entire 10 crores has been invested in the debtor company. Okay, 10 crores it has been invested in the alternate investment fund, and this alternate investment fund has invested the entire 10 crores in the debtor company. Then the regulated entity has to keep aside a provision amount. Where is the provision being taken? The provision is taken from the profit. Okay, so the provision amount of 10 crores has to be kept aside for this AIF investment. Okay, or say suppose 10 crores has been invested in this alternate investment fund, but this alternate investment fund invests only 5 crores into this debtor company. Then how much is the provision should be kept aside by the bank, by the regulated entity? It is 5 crores. Okay, because only 5 crores out of the 10 crores, only 5 crores has been invested to the debtor company. So the provisioning amount of 5 crores is enough to be kept aside. Okay, and one more thing is that does all investments of AIF into the debtor company is considered into this provision? No. One exception is there, that is the equity investments. Okay, say suppose this 5 crores, entire 5 crores has been invested in the equities of the debtor company, then no provision is required. Okay, remember this is a very important point and also a tricky one. Okay, if the alternate investment fund invests in the debtor company, okay, if it is an equity investment, then no provision is required. But if it is investment other than the equity investments, then 100% provision should be kept by the regulated entity. Okay.
We have launched a new course called Static Banking Awareness course. Now this course will be helpful for students who are preparing for the banking exams and for the regulatory body exams. And also recently you would have seen Paytm Bank in news frequently. So when an aspirant reads this news, he would have ample number of questions like what is a payment bank, what are the norms for it, and which is the committee that has launched it. So this Static Banking Awareness course lays a foundation to the current banking and finance news. Now, you have to download our AffairsCloud to access this course. Once you have logged into our app, you can go and click this all courses icon, and then you'll be redirected to this page. In this, you have to go and click the Static Banking Awareness course, and under the details tab, you will be able to see a brief about this course. And under the part tab, it will contain all the contents, all the topics of the contents that are currently available in this course. We are working on this continuously and this will be completed within 2 months. Under the free tab, you can go and access one content, that is the origin and development content, for free. You can go and read this content and have an idea about this course. After reading this content, do attend the quiz that is also available under the same tab. Now, our team has allocated ample amount of time and resources to curate this content. We have created this content from various books and from various verified websites. Our content is better than any book that is available in the market. This is because we update this content on a dynamic basis. For example, there are currently 39 DRTs that are available in the country now. In future, if one more DRT is created or added, then it would become 40. So we would update this content on a dynamic basis. But in case of books, you have to wait for the next publication for this updated content. Nowadays, a lot of practical questions have been asked in the banking exams. For example, how many public sector banks are available on the stock exchange? Which is the payment bank that is being listed on the stock exchange? So, we try to cover as many practical questions as possible in this course. Apart from this, we also provide you a question bank that will contain around 3000 questions and the previous year questions along with it. We also have a dedicated tab that will release the important RBI notification and the frequent news released by the RBI. You can use this code B15 to avail 15% discount. This is one of the highest discounts that we have offered until now. So do avail this code B15 while you purchase the course.
The next news is RBI withdraws conditions on the Religer Finvest under the Corrective Action Plan. What is this Religer Finvest? This is an NBFC, okay, non-banking financial company. What is this Corrective Action Plan? So this is also called as a PCA framework, okay, Prompt Corrective Action Plan. So whenever the financial health of a bank or of an NBFC, it deteriorates, that it decreases, that time if you see the regulatory body, Okay. In case of banks and NBFC, who is the regulatory body? It is the Reserve Bank of India. So they intervene. Okay, they interfere and they try to implement remedial measures in order to restore the financial health. Okay, when the financial health of the NBFC decrease, that time the RBI interferes and tries to implement measures to improve the financial health of the NBFC. Okay, so how will the RBI know whether the NBFC financial health is gone down or not? For that, if you see under this PCA framework, the RBI monitors three parameters of the NBFC. So those three parameters are capital adequacy ratio, tier 1 capital ratio and the net NPA. So these three parameters are monitored by the RBI. So when certain threshold is crossed, okay, there is a limit set by the Reserve Bank of India. If it falls beyond that limit, then this PCA framework is initiated. Okay. So is this PCA framework for NBFC applicable on NBFC? No. If you see, it is applicable on deposit taking NBFC. Okay. And for non-deposit taking NBFC, if you see, the top layer, upper layer, middle layer. Okay. So for the non-deposit taking NBFC, whichever is in the top, upper or middle layer, those NBFCs are covered under the PCA framework. Okay. Remember, there are totally 4 layers and only the top, upper and the middle layer non-deposit taking NBFCs are covered. And this Religer Finvest is a non-deposit taking NBFC which is in the middle layer. Okay. It is in this middle layer. So, prompt corrective action on this particular NBFC, if you see, it was initiated in January 2018. Okay, because certain irregularities were found in the inspection conducted as on March 2017. So, due to those irregularities, this prompt corrective action was imposed on the NBFC. And now certain conditions are removed. Why? Because the financial health is improving, and also recently, if you see, the one-time settlement with 16 lenders in March 2023, repaying over 9,000 crores in the banking system. So it was able to recover 9,000 crores from 16 lenders, and that is why the RBI had withdrawn the conditions under the PCA framework. Okay, I hope you have understood what PCA framework and what are the parameters that are monitored under the NBFC. Next is RBI cancels the license of an urban cooperative bank. So this is the Karwar Urban Cooperative Bank. This is in Karnataka state. Okay. So the license of this bank is being cancelled because of inadequate capital and also earning prospects also. So it doesn't not have a good profit in the future. Okay, it's kind of loss making and enough capital is also not there to absorb the shocks or the losses. That is why RBI has decided to cancel the Karwar Urban Cooperative Bank, and under DICGC, okay, the customers will be provided money up to 5 lakhs. Okay, because the insurance amount under the DICGC is 5 lakhs. So up to 5 lakhs, the amount will be provided to the customers. Okay. Next is Federal Bank launches first biometric authentication. Okay, so India's first biometric authentication for what? For e-commerce card transaction. So if you go to Amazon and when you go to the checkout page, okay, you give the card option. See, you enter the card details and what comes for the authentication? The OTP, right? It is a two-factor authentication. The OTP comes to your mobile number, you enter the OTP and the transaction is completed. But now instead of this OTP, if you see, Federal Bank has brought this biometric authentication, which is even more safer. Okay, so remember, it is the Federal Bank which has brought the first ever biometric authentication. Next is LIC, the life insurance company. It has signed 1 billion, okay, 1 billion FRA. FRA is forward rate agreement. Okay, to what? To hedge against the interest rate risk. With whom? With two parties. Okay, the US based global financial institution. One is the JP Morgan, the other is the Bank of America. With these two parties, the LIC has signed an agreement. Okay, the agreement value is 1 billion. What is this forward rate agreement? FRA. See, LIC, how does it function? It basically sells policies. Okay, and in return, what do they get? They get premium, right? People who buy the policies from the LIC, they pay the premium to the LIC. So LIC will invest this amount in various investment opportunities. Okay, they will invest in the government, our government of India bonds, and also the foreign bonds also. So here, if you see, they will invest in the US bonds. Okay, so US bonds, if you see, say suppose now after 6 months they are planning to buy the US bond. Okay, but now the interest rate offered by them is 4%. But LIC is little scared that the interest rate after 6 months, it might go to 3.5%. It might go down. So in order to protect from this risk, okay, from this possible reduction of interest rate, it has signed this agreement. So suppose that in future, if the interest rate goes down to 3.5%, still it will get the bond for 4% because it has signed that agreement, okay. So in this forward rate agreement, the future interest rate, okay, interest rate risk is protected. By whom? By these two parties, JP Morgan and the Bank of America. So I'm telling it once again, LICs, they invest in the US bonds also. So they might be scared that in the future the interest rate might go down, we might get little returns compared to the present. So in order to reduce that interest rate risk, they sign forward rate agreement with the banks, and here the two parties are JP Morgan and the Bank of America. So here they provide a protection against this interest rate risk, okay. So even if it goes to 3.5%, the Morgan will tell, I will bear that risk and I will give you at 4% itself, okay. This 0.5%, okay, shortage will be taken care by the JP Morgan. For that, the LIC pays a premium, okay. Since the risk is covered by these two banks, for that a premium has to be paid, right? So LIC pays a premium, and that is why JP Morgan and the Bank of America cover the risk, okay. I hope you have understood. Next is Worldline. What is Worldline? This is the global leader. In what? In payments. They basically, if you see, they provide advanced payment technology to the customers. Okay, this is what they provide. They provide advanced payment technology. So they have collaborated with Cosmos Cooperative Bank for what? To accelerate digital transformation through advanced and scalable payment solution. So here, if you see now, due to this collaboration, the customers can have a faster and smarter access to the digital banking services. Okay. So remember the two parties here. One is the Worldline, the global leader in payments. The other is the Cosmos Cooperative Bank. Okay. Here to improve the digital services, digital banking services to the customers of the Cosmos Cooperative Bank, this collaboration has been initiated. Next is about the digital payment index released by the Reserve Bank of India. So recently, if you see, the RBI has released the digital payment index. So this, if you see, it published twice a year. You should remember the frequency of the publishment. It is published twice a year. And if you see the latest digital payment index value, it has increased over 10% compared to the previous year. So March 2025, if you see, the value is 493.22 compared to 445 in March 2024. So it is an increase of 10.7%. Okay. So when was this first published? So this digital payment index, if you see, it was first published in 2021. So as I said, semi-annually, twice a year, and the base year was March 2018. Remember, base year was March 2018, and the base index or the base value was 100. Okay, remember all this. These are all the static part of the digital payment index. Very, very important. 2021, it was published for the first time semi-annually, that is published twice a year, and the base year. Okay, it was first published. The base year for which it was published in 2021 was March 2018. The base value was 100. And there are totally 5 parameters. Okay, under this digital performance index, there are totally 5 parameters. First one is the payment performance. This bracket indicates the weightage. How much weightage is given to this particular parameter. Okay, first one is the payment performance. How is the payment performance? Like UPI, how is the performance of that? So that is what this decides. Okay, payment performance. Second is the payment enablers. Next is the payment infrastructure supply side. Next is the payment infrastructure demand side. Next is the consumer centricity. Okay, so you have to remember these 5 parameters, very important, and more important is the weightage. Okay, so the highest weightage is given to the payment performance with 45%, and the lowest weightage is consumer centricity 5%. You have to remember all 5 parameters and the all 5 weightage given to each parameter also. Okay. Next is about the GDP forecast by the IMF, International Monetary Fund. So IMF, if you see, it had recently released the outlook, July World Economic Outlook. So in that, if you see, it has raised the India's projection compared to the April outlook. So April also it had released the World Economic Outlook. So compared to that, the projection has increased. So if you see, the latest projection is 6.4% for both financial year 26 and 27. So both financial years, the projection is 6.4% by the IMF, and for the world, if you see, it is 3% for the calendar year 25 and 3.1% for the calendar year 26. So the inflation, this is also for the global. Okay, this one is for the world projection. This one is India's projection. And this one, if you see, this is the inflation projection of the world again, of the global. Okay, so inflation projection, if you see, it is expected to be at 4.2% for the calendar year 25 and 3.6% for the calendar year 26. Remember, IMF, it is a very important institution, so you have to remember the GDP projection both of the globe and India. Next is about an appointment. So the government of India has appointed Anuradha Thakur. Okay, has appointed Anuradha Thakur as the RBI Central Board of Directors. So if you see, the current position of Anuradha Thakur is Secretary of the Department of Economic Affairs. Let us see the structure of the Central Board of Directors. So if you see, the Central Board of Directors consists of official directors and non-official directors. Okay, so under official directors, it is the governor and the 4 deputy governors. So 1 governor and 4 deputy governor. And under the non-official directors, if you see, 10 directors from various fields and 2 government officials. So in this 2 government officials, 1 person will be Anuradha Thakur, who has been recently appointed, and the other one is M. Nagaraju. Okay, so these 2 are the 2 government officials. First one Anuradha Thakur, second M. Nagaraju, and other 4 directors, each from 4 local boards. So 1 governor, 4 deputy governor, 10 directors from various fields, 2 government officials, and 4 directors from each 4 local board. So totally how much it comes to? It comes to 21. So this is the strength of Central Board of Directors. You should know that there are totally 21 members in the Central Board of Directors. Okay. The next news is about an RBI approval. So Xflow. Okay, Xflow is nothing but a cross-border payment platform. It has received RBI approval to operate as a cross-border payment aggregator for the cross-border transaction. So online payment aggregator for the cross-border transaction. For that purpose, it has received approval from the Reserve Bank of India. So here you might be confused that it is already acting as a cross-border payment platform. Then what is this approval for? You see, previously, if you see, though it was acting as a cross-border payment platform, it did not have its own RBI license. That is, then how was it working? It was working through another RBI authorized company only. So it was not working independently. It was working through, that is, it was completing the cross-border transaction only through another RBI authorized company. It was acting like a middleman. Now, if you see, it has got the online payment aggregator for the cross-border transaction. Okay, remember the company name is Xflow.
Thank you for watching the session. I hope you had enjoyed it. We're also available in Telegram under the name AffairsCloud_official. We also have an Instagram handle. Thank you.